Yo, what's going on everyone? Back with another Elliott Wave analysis for Bitcoin. In this video, I'm going to be discussing the continuation and pullback scenarios, which pretty much have equal weight when it comes to the overall probabilities. Now, in the previous video, we discussed that the impulse idea was going to be coming into play, and we did already go up here and we are reaching critical resistance. But now we have to talk about what ways we can narrow down the scenarios as best as we can. Now, just a quick friendly reminder, please do hit the like button and also subscribe to the channel if you haven't already. It really does help me pump out more videos for these Bitcoin videos if you guys and girls show interest. Now, it's getting quite tricky as the overall sentiment from the general markets is quite bullish as we speak. Markets tend to be very bullish in regards to sentiment when we start reaching critical highs, especially near the all-time highs. We were very close to reaching an all-time high by a few $100s, really close. And the opposing side of the argument, of course, is that there is always going to be the possibility of a pullback at critical resistance. It just depends on how far or severe of a pullback we get, and we're going to discuss that in just a moment. Now, many long the previous high, and that's why they are anticipating to either get out of their position or at least hold it out to see some more gains as we reach higher levels, which is arguably the overall trend right now. That's going to be presented in this scenario. Now, what we have here, starting off with this first specific scenario, is the only real narrative continuation for a bullish scenario. It assumes that we are in an expansion phase for the final higher degree wave 5 to the upside that we're going to be completing. And I've been pretty sound about this, especially from all the racked up evidence that we have been discussing for the past few months. But that doesn't go to say we still have a lot of fuel in the tank before we truly reach the top. I do believe, yes, I do believe that the bull market is coming to a conclusion when looking at it from a top-down analysis, especially from a macro perspective. My way of viewing the markets, and I also highly advise everyone to take this deeply to heart, if we're going to take a lesson or two from the previous bear markets, is that you want to assume corrections earlier on a higher degree, rather than assuming where the possible top may be and how far it may continue. That simply means that you don't want to be trying to time the tops, rather you want to try and find the right signs from a risk management perspective to secure your capital instead of trying to maximize your capital near the end. It just means that you should be taking profits as we go up where liquidity may be the strongest, and that's presented in this expansion phase alone. And once we do reach a possible top, we will find signs of a possible top. I would expect euphoria to occur, have a distribution phase, and then go for a larger pullback, which will technically be a bear market once again of a higher degree wave 1-2 pullback. And that's where you'll see a cyclic fractal of around a 70 to 80% pullback. And that's usually how it goes for these types of pullbacks when it comes to a bear market. Now, starting off with the very bullish idea presented here, we have a lot of pros and cons when arguing against a larger pullback right now that we could be happening. Both scenarios I presented in this video shows us going for a larger degree wave 5 to the upside no matter what, to the all-time highs regardless. But the second scenario, which we'll be discussing in just a moment, shows us going for one more pullback that we also must be aware of. So the pro to this specific scenario of the 1-2s is that we have a relatively great buildup of momentum when nesting our 1-2s, and the continued series of these 1-2s are getting smaller and shallower both in size and time when discussing the support levels for the wave 2s of each respective degree that's being created. So as you can see here, this larger wave 1-2 was created as a flat idea. We have a 5-way move up for a wave 1-2. This was smaller in size and time. This wave 1-2 of the primary degree that we have here is also getting smaller. And then this wave 1-2 of the intermediate degree, although it is deeper than what we have for the previous higher degree, is that it's also more or less, arguably, at the current time of recording, nearing completion for this wave 1-2. And we should be, if we're going to be continuing these nested 1-2 structures, is that we're finally working for that final 3-4-5 to the upside, and the last 3-4-5. It just continues to build up as we are building and distributing as much as we can before we break the all-time high. And arguably so because we've already breached so many previous highs and also very close by a few $100s, like I mentioned, from the all-time high. This idea stands very true to its respectable possible continuation to the upside as the narrative. Now, what we're looking for here is that we are looking for this intermediate degree wave 1-2 to be complete more or less pretty much very soon. The 78.6, I would say at that point, we want to be looking at the alternative bearish scenario of the shorter time frame. But right now, if we're going to be continuing further to the upside, we really want to be creating these nested 1-2s as shallow as both in time and size as much as possible. And this right here is pretty much at the expansion phase, or the peak expansion phase rather, where we're going to go for one final push to the upside. So that will be determined in the next few days, in my opinion, in terms of which direction that it's going to be going. And that leads me on to the second idea. The only pullback scenarios that I can see it from, in terms of where we are still having a protected low and also protecting somewhat these lows over here as well, is the ending diagonal ideas. Now we have two variations. One idea is the expanded variation. Now I have also mentioned this in my social media on X, that this is also another possibility from the macro perspective, because we have seen from an evidence perspective and from the price action history that a lot of times, more or so or not, is that Bitcoin does like to create these ending expanded diagonals rather, to create a larger move to the upside, but we move correctively to the upside. Now, there's a lot of pros and cons to this as well. But the first thing is, what's very critical is that we do also break this previous high of the all-time high, but it still moves up correctively. So this idea it's actually kind of my preferred idea over the contracting idea, because really, ideally, when you have this wave 4 trying to enter the price territory of wave 1, which is the tendency for this diagonal when we're talking about rules and guidelines, I would say at that point, it's starting to create a parallel channel idea rather than having it have as a contracting idea. That's why it's a little bit less likely. It's the more unlikely scenario rather. And I think that this expanded idea just fits a little bit better, because if we go back to our January pullback that we had when we created a new high in this region over here, we did create a higher degree wave 5 as an expanded ending expanded diagonal, where this wave 5 has ended conclusively at the very top and came back for a larger pullback of a 1-2 here, and that, or a 3-4 rather, and that's what created that continuation to the upside eventually after we had a large significant pullback of around 20%. This move here ended as an expanding diagonal, and I like to see it that way as such. And if we're going to take that lesson or two from past price action, of course, it's not indicative of future price action. It's just based on my own personal experience and probabilities of how to kind of arrange it, is that I do like to see the idea being created as such, because we do also break the previous high as the expectation. We still go up to all-time highs, and then we go back for the larger pullback, as this is the last final distribution phase of that euphoric phase that we're looking for. Now, why do I like this idea as well? Is because we start having a little bit better of a structure when we're talking about the internal structures. It still doesn't have any real impulsive nature until we truly go out in terms of the minor degrees to create that real nested 1-2 structure. That's what we're looking for in the first impulse scenario. But for this idea, with the current data given, it does fit pretty darn nicely when we have this being divided as 3 waves in between, because the ending diagonal variations all want to be created as 3, 3, 3, 3, 3 as the zigzag families, as normal ABCs or WXY complex corrections. What we have here for the first wave 1, definitely indicative of a wave 3-way move to the upside as a WXY, ABC or WXY for a wave 2. And then here, this also does look quite nicely, especially with this current resistance that we're at for this wave 3, is that we do have a possible resistance here where we go for a large pullback and then we go up. So keep this in mind. This is absolutely possible, ladies and gentlemen. And also right here, when I will go over the short and micro timeframes as well, is that we do have a possible ABC here that's completing for this wave Y. It just doesn't look impulsive in nature until we actually get out of here, and it gets a lot more riskier for longs, even though no matter how bullish we may be, if we're thinking that it's going to be breaking all-time highs. So that's the most important thing to keep in mind, is that we are still moving correctively to the upside. And in my opinion, I think that this larger pullback around this 59 to the 60K levels is also another possibility where we have this protected low in place that'll trick the bears and bulls once again, and then we'll have one last expansion phase, most likely as a 3-way move, where we come up and we will find clues on whether this is still a larger continuation to the upside. But since the previous or preceding waves are created in 3 waves, we are going to be expecting one more 3-wave move to the upside for this 5th wave of the 5th that'll complete this larger 3, 4, 5 to the upside, and that will be the bear market, where we will see a 70 to 80 to 90% pullback. Now, that's the expanded variation. Now, what about the more unlikely ending diagonal variation, where it's still pretty much the same idea, but it's just contracting in nature? Now, I like this idea in the sense that we do have the same internal structure up to this wave 3. However, I don't like this idea in the sense that we may be creating a deeper pullback if we do start to breach these levels over here. So if that's the case, I think we start to lose the contracting look for that possible wave 4 if we're going to be also assuming that it should be coming back into wave 1 territory, as the diagonals usually do have a tendency to go back into the wave 1 territory. Now, that's not a must-have rule. It's not a hard rule anymore or a hard guideline. It's just saying that there's a tendency to go back into that wave 4 or wave 1 territory rather for this wave 4. Now, if that happens, this is, like I've said, it's going to be starting to create more of a parallel channel look to it than a real contracting look to it. Now, if we do get some kind of significant pullback of an ABC or WXY here, this, you might as well, again, have a better way of kind of organizing your scenarios and just work with the impulse idea where this wave 1, 2 still may be in play, and that will be better fitted as the impulse continuation rather than having this as an ending diagonal of a contracting variation. A breach of this level, I would expect maybe, I don't know. Maybe we can still create a contracting look because the S&P and the S&P 500 or the SPX chart does have a possible extremely large ending diagonal that's being created as well. So if we pull up the SPX chart, there is a possibility that this may be a huge wave 5 ending completing as a large ending diagonal as well. So we do have the possibility there as well. So yeah, maybe that is also a possibility here where we can extend this contracting nature in the look as much as we can. That's why this idea even exists in the first place. But again, we'll have to see how this goes. So yep, that's how I'm going to be seeing that. We have two scenarios of a possible pullback scenario here. We're going to be expecting either the ending contracting variation ending around these levels here where we get supported immediately in this support region, or we have a larger pullback as a larger ABC. We're going to be kind of looking for the next clues of the next actionary wave. It is starting to look impulsive, but again, this impulsive scenario where we have a corrective pullback, and if we're expecting to be bullish in any fashion, if we come up to the very shorter time frames, this can be created as a WXY, and then we have an ABC. This wave C is quite extended, possibly even further than what we should be expecting for a wave C, maybe way surpassing the 2.618, which should be the maximum level, by the way. But yeah, it's already surpassing the 261.8%. So this is getting a little bit tricky here, ladies and gentlemen. Maybe this isn't that a corrective scenario that we're looking for a wave 2, and this may be looking for a possible move to the downside, either for some kind of ending variation of that ending diagonal scenario where we have an ABC pullback where we still get supported at some level before we move up, but in the shorter time frames, it's getting a little bit more tricky. So we really want this to be having this as supported as best as we can in this support level as well. So the 38.2 all the way up to the 78.6, I don't think that's going to be a wave 2 at the 78.6, especially with this current look of a wave 2 pullback. We really want to be getting out of this level now around the 50 to the 61.8% zone, and then we should be continuing up. So if you're watching this video a little bit later and you're still seeing the aftermath of what's happening after this video, this move here, if it moved up from this level here, then you know that you are in the impulsive scenario most likely. And if we go back for a larger pullback, then you most likely, especially if we break these levels, is going to be a larger ABC pullback. And if it's going to be a more shallow type pullback where this may be an impulse move to the downside, where this may be a 1, 2, 3, 4, 5, where we have this as a 1, 2, 3, 4, 5, that could be leading us into a wave A, B, and then another 5-way move that can be completing for that wave, subwave 4. So that's how I'm going to ending this video. Thank you very much. Again, please remember to subscribe to the channel, like the video. And I will be making sure to have more updates possibly in the weekend if there are enough likes. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the weekend, or Friday rather, and the rest of the weekend. Bye-bye.